So you guys will have full access to what everyone was saying. And if you want to ask questions later, you can. I'll answer them. So there's really no big deal. So I guess we can start it off with questions. If you guys have questions, really about anything, I can take any questions, or we can get straight into the what's called the study session. Let me know. Let me pull this up real quick. Make sure this is recording. Okay. There we go. All right. Oh yeah. How do I share my screen? I want to show you the trade I'm in right now. Dude, I've never done this. This is so fucking hard. Oh, share screen. There it is. This. Go live. All right. Let me know if you can see this. So, I went long on SPX. This is demo, just to let you know I'm not trading real money today because today's a bank holiday, and usually what happens with bank holidays is the price action itself is shitty. And I mean it, bro. It is choppy on chop. It is just pure chop. So trading demo here is the safer option because even if I get stopped out, I know exactly that. I know why and stuff like that. It's just price action. How do you confirm that low of the week or high of the week is on Monday and we don't put it on Tuesday or Wednesday? How do you confirm that low of the week or high of the week? Oh, shit. So you're saying, holy fucking executions. How of the week is on Monday and we don't put it on Tuesday. What do you mean put it on Tuesday or Wednesday? So you have like your week high, week low. Are you asking like on what day we're gonna take out the high and low? And like what kind of bias you should have? Cause see how I marked out like no. Alright, then I'm not understanding your question. Yeah. Okay, so we're bullish. Let me go full screen. Probably looks better for you guys. You guys can see my screen, right? Low of the week, there's a high odds we'll put it on Tuesday or Wednesday, right? Well, if you're saying like the weekly bias is bullish and you're saying that we mark out the weekly high, weekly low, you're saying that the weekly low will get taken out because there's high odds on Tuesday and Wednesday. I don't think there's odds. The thing is, the market moves, dude. You should mark them. The weekly high, the weekly low. Yes, you should mark them. I personally don't target them if it's like, for example, right now, the price action. You see this daily candle. I'm not sure you can see it. It's right here. So we are so close to that weekly high. where we closed, higher last week. We're so close, and we are currently bullish, right? Right now, my mindset is on the week bullish. Maybe on the day, I might be bearish for that day because it needs to come back into premium or discount, whatever. But on looking on the week, if you just look at this, you can tell right now that the week is bullish. Now, can the week go bearish and grab like a premium PD array, like a daily fair value gap that it wants to bounce back off? 100%. 100%. Me personally, I don't look and I don't target the weekly lows and high or whatever if it's near my areas of confluence. For example, standard deviation, you guys know I love standard deviation. You guys should definitely start using it. If the standard deviation lines up with, for example, the weekly high in this example, then I would target that weekly high. But I wouldn't say there's odds of like when that weekly high or low gets taken out or gets traded into or through in the week, because you never know. Because a Tuesday there could be CPI, and it could just go the opposite way, and then your odds are completely wrong. For example, So, all right. So the reasoning for this trade right here, pretty sure. Well, I didn't call it out, but I put it in charts. Because I'm not going to call out demo stuff. We had Asian lows down here. This really wasn't like a full like high time frame PD array. That's why I don't like these kind of trades, because if you're the main part of my strategy, at least the 2022 ICT buy model, is the first thing you need is a high time frame PD array. And so usually if you're trading on the 5-minute, which I take most of my trades off, anything below the 5-minute, 3-minute, 1-minute, so those 3 time frames, you look on the 1 hour for a PD array, for a high time frame PD array. So what does that look like? So I've marked out, this 1 hour fair value gap, but as you notice, if you remember my last video, I talked about this, and this got traded through. Consequent encroachment, close above. So we now know, and we should expect, as you can see this price action, for this to respect this. Now, is there a possibility we can come back into it? Sure. Looking at the price action currently, I don't think it's going to do that. But hey, you never know. The only thing I don't like about this current trade is that there's no high time frame PD array, except like I would say this low day, which would be considered pretty high time frame liquidity for me. This would be sell side liquidity as low day. The only problem with that is that when we sweep this, we make another low day. And so that just creates a whole low day, low day, low day. So the only kind of sell side I have, and the only kind of PD array I have was this Asian low that was here, which was swept at like 8. And then if you look on the 5-minute, because that's where we're going to be trading, you can see it was swept at 8.10, and then very strong move back up, almost touches the low day, but not quite there. Comes all the way back up with this bullish candle on the 5-minute, another bullish candle. I was looking at this market structure shift, right? Because there's that swing high that creates that swing low. Swing low would take out that swing high, and you can see that standard deviation would have been very dramatic, like very, very big. So that's what we would like. Unfortunately, we didn't get that the break or the closure above. And we traded back down. Still swept those Asian lows, and then came up, saw this 5-minute market structure shift, marked it out with what's it called? Standard deviation. Or no, I think this is a 3-minute. Where did I mark it out? Where's the standard deviation? Oh wait, I think it's off a little bit. Yeah, the standard deviation is supposed to be here. Yeah, because that's the market, yeah. So swing high, swing low, and then it closes above. The only thing here is that it's so, what was the word, choppy? this whole area, like I don't know if you can even notice, this whole thing is pure chop. Like I'm not even like I'm not even supposed to be trading this because this is just, you're either not going to get a big move or you're going to get a move and it's just going to instantly come back on you and go break even. And you can see here, I'm in long from these lows here. You can see that we went up, try to sweep these highs up here, and we just kind of come back down, get stopped out, come back up, TP, get stopped out, come back up, get stopped. It's just back and forth. The only time you're going to break out the range is probably tomorrow. So we can let this sit through tomorrow, but 100% going to get taken out. All right, do you guys have any questions currently before we jump into the notes? Let's see, this is recording. Cool. This could be questions about the Discord, me, trading, fucking whatever. Literally anything you have questions on your mind right now, you can ask them. This is meant to be like a Q&A. I guess backtesting, but right now we're, I guess, live trading. Now, I'm wondering, can you... No, you can't. Can you see my notes here or no? Like, I have notes on the screen. Can you see them? Oh, you can see this? Really? Like, you can see the vocabulary definitions and stuff like that? Oh, okay. Yeah, let me reshare my screen then. Okay, yeah, okay, I got you. Yeah, I gotta reshare my screen. There it is. Notes. All right. So you guys can see this. And you guys can ask questions like whenever. Like, it doesn't have to, I don't have to give you permission to like ask questions. Like, if we're going over something and you had a question about the live trading or the back testing, please ask. All right. So these are my personal notes. There's a bunch of stuff here. We're just gonna go over the vocabulary. I started the notes when I probably, shoot, dude. Wait, we could probably go back in time though. The first notes I took, this takes a while to load because there's so many, was 2022. So basically like 2 years ago, bro. And you can see like this was my trading back then. This was my trading, bro. Like, you can see we've improved. But you can see, listen, this is why it's important. And this is a trading lesson and a life lesson. I'm glad you're here live listening to this. It takes time. Not everyone gets lucky learning the right way at the right time. It takes time to develop a strategy. It takes time to fucking understand, bro. I was trading supply and demand. What the fuck was I doing, bro? This is pre-market lows, fucking supply and demand breaking through. What the fuck was I doing? Resistance. I couldn't even spell resistance back then. Look, what the fuck was I doing? Anyways, my point is, taking notes early on will help you so much because not only does it keep you disciplined, right? Like, just look at the amount of notes I've taken. And like, to me, this is not a lot because in 2 years, this is really like, this really is not a lot to me. Almost every day there's a daily recap in here. Every single day there's notes, daily recaps, freaking video ideas, everything and anything. Right? Boom. Yeah, indicator. So I'm glad you mentioned that. I used to be an indicator guy too, like anybody else, you know, like indicators of, what did I have? Well, there's obviously the EMAs, the VWAP. I would consider that some solid indicators. Those are probably the only ones that everyone else in the trading space will say those are okay, because those are literally what they use on Wall Street, bro. I've been to Wall Street. Like, I was in the New York Stock Exchange I see in their computers, bro. I can probably show you a picture. They have a chart and they have EMAs and VWAP, and that's all they have. So yes, technically, if they use indicators, then I could use this indicators. The only indicators I wouldn't recommend is like buy and sell signal. All right, that just shows you that you're a fucking noob. I'm sorry. I used to have them, but I used to have them to give me confirmation that I'm supposed to be buying. Not, oh, I'm just relying on the buying. Let's say I had a strategy and I would be like, all right, maybe I want to buy here. Does the signal or the indicator tell me to buy? This way it's like double confirmation. You know what I mean? What other indicators did I have? There's some indicators. Listen, all indicators are lagging. Okay, so it's not live price action, but right now what I have is, or you can see my screen, but I have the kill zones, so the Asian lows, the London lows, everything. So everything's already set for me. So the Asian lows can be found just like that, so I can have that liquidity set up right there. I have the candle, so I can look at the candle, the daily candle being formed on the 5-minute time frame, if that makes sense. This way I can look at the price action, the day, the low day, the high day, this and that. What else? I have like swing high, swing low, so I can know exactly, like even on the 1 minute, I know exactly where all the swing highs, all the swing lows are. And then I have the New York session, so it tells me where the New York session is, Asian session, London session are, and I can go over that pretty quickly. All right, let's get into the notes. If you guys don't have Notion, I would recommend downloading it. If you use Google Docs or Discord, whatever you use for notes, I'd recommend open that up. If you don't want to take notes and you want to take a photo and take notes later, that's perfectly fine too. No worries. Oh shit. Is it me or what happened with the sound? Do I need to leave and come back? Okay. Let's just move on. I'm gonna ask you, do you guys trade options or do you guys trade like futures and stocks? Like when you're taking a position. Okay. So no options. All right, so then I won't be going over this because I don't wanna either peer pressure. I don't want to peer pressure or teach you about something. I mean, I could, because I guess for the people watching, they might want to know. And for the when I'm recording. So I'll go over options really quickly. It's not directed to you, but it's just for the people that are watching the recording later on. So I'm just gonna read through this. Starting off, the contract value listed consists of two values, intrinsic and extrinsic. I don't know how to pronounce these values. Intrinsic value is measured through time decay of the contract, whereas extrinsic value is measured through the correlation of the contract's strike price and the underlying current price. An option contract may be bidded on through the bid-ask spread, as you would be purchasing shares of the underlying bid buying, holy fuck, I'm dyslexic. Bid being the buyers, ask being the sellers. The option chains. The option change is where the contracts are located. You'll be given different days till expiration, or DTE, listed as 3D. This would be an example of a contract that is expiring in 3 days. The closer your DTE, the faster or more volatile the price of your option contract will be. When you select the DTE you desire, the option chain will expand and you will be able to visibly see all the strike price. The strike price is the dollar amount on the underlying chosen security at which you are giving yourself the right to purchase 100 shares of the underlying stock. The strike prices will be listed in a ladder format going from high to low for calls and low to high for puts. Looking more directly at the call side, the underlying current price will be listed in between what are called in the money, ITM, or out of the money, OTM, at the money, ATM. To distinguish them, if the contract's price is below the current underlying trading price, then you would have an example of in the money call option. The opposite is true for strike price above the current underlying price. Okay, that was a lot of words. How is my contract price going to move? The price of your contract will move depending on what are called the Greeks. There are 5 of them, right? The delta, theta, vega, gamma, rho. I'm not even sure that's how you say it. So the delta, what is it? It defines roughly how much your contract will move based on a $1 move in underlying. The theta, theta. I don't take Greek. Theta defines roughly how much your contract decays over time throughout your DTE. The vega defines roughly the amount your contract price will change during a 1% increase or decrease of implied volatility. Gamma represents the change in the options delta, measures rate of change, and rho measures the sensitivity of an options price to change in interest rate. Now, this is the fun part, the risk. It's not really fun, but it's very, very risky. Options are arguably the most risky asset to trade. Setting stop losses and managing your risk are the only way you will become profitable. They're not get rich quick scheme. Measuring the volatility of the market and then setting stop limit orders will stop you out for small losses if your ideology is invalidated. Plan your trades, then trade your plan. If you can't be a good loser, you will never be a winner. That's good. I like this quote. If you can't be a good loser, you'll never be a winner. Long term, to stay in trading, you need to stay afloat, and having a proper risk management plan can do that for you. If you're constantly losing 3 to 10% of your account and then gaining 2 to 3%, there's a lesson to be learned here. Learn from your losses. That's huge. Please take your notes on your losses. As you can see, when I do videos, for example, I explain the losses. I'm not scared to talk about them because that's how I improve on them. Write them down. Dive deep into why you traded the way you did. Did you execute your plan? Did you hold your losses, etc., etc.? All right, so that's options. Just for the people that are watching and for the recording. All right, let's look. Let's look at liquidity. So, I just want to give I guess not a shout out, but like a disclaimer. When I started trading, like smart money, ICT type of trades, I wasn't doing trend lines. I wasn't doing freaking big order blocks, stuff like that. When I really understood like the way of trading and how like everything is not everything is manipulated, but you can see sometimes price is manipulated. There's engineer liquidity. There's some spots of the market where it's like, that doesn't look right. Why is it buying more? You can kind of notice these patterns. 9:30 has more volume than, midday, stuff like that. And so when you get into the algorithmic of trading, that's when it gets fun. When I first started trading, my thought of liquidity was this picture right here. My thought was any swing low and any swing high is liquidity. Now, can anyone tell me why that could be mistaken and could be a very big issue? If you don't know, that's fine. Because to be honest, it's different for everyone. But why would having every swing low and every swing high be liquidity be a really bad issue? Especially if you're going to target it and maybe take a trade off of it. I'll show you right now. Let me share my screen on TradingView. If we were to take this 5-minute chart and mark out every swing high and every swing low as liquidity, so just right here, that's liquidity. That's liquidity. Oh, broke about that. Okay, so we're about to hit TP1. That's liquidity. That's liquidity. Whoops. What the fuck? That's liquidity. That's liquidity. So just in this like time frame right here, we have a lot of liquidity. And you might say, oh, this is a good example. Oh yeah, we sweep this liquidity right here. Okay, and then we come down. Cool, that's your trade. That's fine. But okay, why this one though? Because there's also liquidity up here. So why would I not want to target this? And this over here creates liquidity, and you can see maybe, oh, look, this is reacting off of this. So maybe I should go short right now. So you're gonna go short, and you're gonna realize, fuck, I went short, but I don't know why, because it hit a liquidity that's bearish. So you're thinking, if it hits that liquidity, it's gonna do the exact same thing, even bigger. It's gonna make me more money. There's too many. And the order flow is just not there. Right now we're bullish. Why would you go short on a small time frame liquidity? What I want you to realize is there is so much liquidity. Actually, I'm pretty sure we should go over the definition of what it is, because I'm just fucking ranting here. Let me go over my notes again. It's kind of fucking annoying to switch back and forth. Where are my notes? Here. Let's see if I have the definition. I don't even have the... All right. Liquidity swing points in the market. This is determined where the liquidity is determined. The swing low, higher low to the left. This swing low, higher low to the left, and a higher low to the right. Okay, and this would be the lower low. Then swing high, lower high to the left, and then lower high to the right, and this would be the higher high. Psychology of the traders. So when going long, traders will most likely place their stop loss on the swing low / swing high for sell stops and buy stops. So when you place a trade, oh, dude, can I just share my screen like as a whole? Yeah, can you guys see all this? Okay, there we go. Yeah, let me just do that. This would be way easier. As a whole right now. Let's go back to here. You have buy side and sell side. Okay. So buy side liquidity is anything above here. So this would be buy side, for example. This is buy side liquidity. And then down here would be sell side liquidity. Where is it? Sell side. Now, the reason why I marked these particular highs and lows is because right now in this range, that is what is the most prominent to be taken out or counter rejected. Now, there's another one you might not notice, and I can notice this one right now, is this. Equal highs. That is considered liquidity. Equal highs. This could have an impact. This high, this high, this high, this high, this high. Even if these guys are not swing highs, they're equal highs with this one. That's huge. Okay? That should go in your notes. And we'll talk about it. But let's say I go long or I go short here. My stop loss would probably be this high. Or let's say I went long on this candle, which I did. My stop loss would be nearest liquidity. So probably this down here, that swing low. Okay, for example. Another example of liquidity could be previous week highs and lows. So previous day high and low, or session highs and lows. So this can really be traded down to like even the monthly, the yearly, but those are big time liquidity. So the higher time frame liquidity you have, the better, right? Because it's going to be more, it's going to have a bigger impact, volatility, right? Wise. If you have a swing high that's created on the 1 minute and it can easily be broken through on the 5 minute, because the time frames don't align and the 5 minute is way bigger than the 1 minute. So if you have something on the 1 hour, it's going to get respected a little more than if it was on the 1 minute, for example. Equal highs and lows, old highs and lows, and then I just have some pictures of Twitter, what the fuck, X. What is liquidity? The algorithm moves systematically searching for your stops, either buy stops or sell stops. So they're always looking for you to, get out the market. There are only two PD arrays you need to know: old highs and old lows, or imbalances. Okay. As you can see in this picture, this fair value gap is in a way considered liquidity. So old highs, lows. This you could also add like remarkably swing high, swing low. I would ask that too. Let's see what else. How to determine the direction. We can use external liquidity and internal liquidity. If a major external liquidity pool has been taken with other confluences for confirmation, our eyes need to look for the next internal liquidity pool, which the algorithm is looking to reprice to. So let's see where the picture is. So you have external buy side liquidity, and you have internal liquidity, which is that fair value gap. So external, I don't know if you can really see this, but external liquidity is that, like, I'm guessing that 1 hour to 4 hour buy side external liquidity. We get swept through on the 5 minute, let's say, and on the 5 minute we get a market structure shift. We got that fair value gap, and you can see that internal liquidity is getting repriced, and then the order flow goes back to where it actually wants to go. External liquidity rests in forms of old highs or old lows. External liquidity rests in forms of imbalances. As price is fractal, and by determining which time frames is higher for you, you might view things differently. So yeah, weekly to daily, external. So anything in like the weekly or monthly to daily would be like super external. And then I would still consider, like in my strategy, like the 4 hour to 1 hour. Those are probably the most used like liquidity areas to mark out, at least. How does this affect day traders? If a major external liquidity pool has been taken, price refuses to take out internal highs and lows and moves from the imbalance instead. The explanation of, well, I don't trade Forex, but this would be what happens. So after a major external liquidity has been taken, which I'm guessing is this one, price refuses to sweep highs even if it is low resistance runs. Price rebalances an imbalance and continues its bearish run. You see? So that's how liquidity works. Now you'll see liquidity being used all the time in the market. Oh, look at that. Our trade is not doing too bad. Okay, this is bad. I'm wondering where pretty sure my stop loss is like, or my take profit is somewhere here. I don't know where it is. But this is good. So this is right now we're going to be doing a little bit of live trading. As you can see, what I marked out my standard deviation here, that -1 is right above those equal highs. But there's currently one little high I'm looking for, is this one right here. That's what I'm worried. And the only problem why is in this 5 minute range, what I like to do is every time it hits liquidity, I look for the range. So when it hits that swing low or that swing high here that it's going to create at one point, I'm looking for that swing low, and I can already say like, oh, we have that swing low. Let's say we create that swing high on that second candle. It would want to come back into some kind of premium and then bounce off that premium to take out, internal liquidity, and I guess that are take profits. So right now it may look super bullish, but it's going to hit some kind of level, some kind of liquidity that's going to be pretty powerful. That's why you should have them on your chart when you're trading. I wouldn't have every swing low or every swing high marked out. I would have the ones that are significant. Hence why you should draw your standard deviation, because here at the -1, I'm like, okay, this is the first order of business. this is where price is going to most likely hit some kind of liquidity. And if it's these liquidity appears, then it's fine. You know, if the trade is super small, mark them out. Basically what you're doing, and I'll show, oh my gosh, shut the fuck up, phone. What you're trying to do is this. Let me just, so liquidity comes down here. Actually, we'll do something like this. Okay. So here's our candles down, and you're looking for liquidity points like this, for example, that are like kind of resting. Like this is an example, but like that could be a problem to price, just for example. So when you're looking at this, and this is gonna be like a really rough draft, but see these up here, this would be like here. So when price comes up in your when you're taking a call option or you're buying, you're looking for anything that's gonna maybe like reverse it. And so what you really want to be looking at is when price hits one of these levels, even though it's not the biggest level, it has created a pretty down, you know, pretty big move down that has created those, or that swept those Asian lows. So this would be considered pretty, you know, pretty big liquidity for me, hence why I marked it, and hence why now we're watching this price action. And if it just wants to break out, then guess what? That's even better for us, because it tells us that this current price action of buying is stronger than expected, because what's expected, it's expected to come down into a premium and maybe tap back into that, maybe a fair value gap, and it comes back down to here and then pushes back up. So it's expected to come down. But if it continues up, then it's just great, you know. And then what's the next order of business? It's this one. If it sweeps, if it closes above that one, even perfect. So what's the other biggest obstacle here? This one. That would be like the last like liquidity area I would be worried about. So once we break this, I can say, okay, I'm hands off. It's probably going to hit my TP, or we want to make sure. Let's just see where my orders are. Okay, so this, you can see I have limits already set. Let's move this one down to this one. You can see that where is it, limit? Oh yeah, so literally right here at the, should probably set it at this liquidity point then. So once they hit this, even if it comes into this and it doesn't close and it just comes into it, then we'll be risk-free and we'll be good. Once we hit that, I'll move my stop loss up to break even and we should be good, right? I guess I should probably do that right now just so we're free. I'll just move it here. But you can see now, this is expected. We're making, and this is also like shitty price action. We would want to see a swing high here, because I can't really draw this range if there's no swing high. So we might have to wait another 10 minutes for this candle to buy its way up here, make a new little high, and then create another candle that comes down. But here, even on the 3-minute, let's see if there's a fair value gap. Maybe on the 1-minute, I'm not seeing anything. All right, I guess we just wait. All right, let's get back to the notes. Enough of this live trading. Another thing I want to talk about. So, okay, I'm gonna ask you, what do you guys want to learn about? Because I have a lot of notes, but some notes are not fully done. Because I was not expecting to like teach them. Right, this is just like my personal notes. So some stuff I personally know like off the top of my head, and I don't need notes. So you'll notice like when I click fair value gaps, for example, I just have this gap in price where the low of the first candle is higher than the, you know, blah, blah, blah. Like this is because I understand what fair value gaps are, but I don't have like really specific notes on this and like freaking images and like everything else. So let me know what you guys want to learn. I'll try to find it in my notes and we can learn about them, or I can teach you more about what's going on in this trade and maybe, you know, standard deviation, the premium discount range, how to find the ranges, basically my strategy in details, if that makes sense. Just let me know. How do you frame your trades with economic calendar? Yeah, that's good. Let me pull it up real quick so we can see this. So right now, you can see, shit. You can see this is, can you guys see my screen with the Forex calendar? So right now, what I like to do is when you're on the, I would recommend using this because it shows you all the high impact news. You can use any other website that tells you news, but not live news. Like these are planned news events that are coming out. These are you know, if Mr. Powell is speaking, then it would tell you. If there's freaking Empire State Manufacturing Index that it's coming out at 8:30, it would tell you. And then it also tells you how big of an impact this can have on the market. You click this little green arrow thing, and it tells you you can have like a filter. So obviously, let's just go none with all these, and we're gonna choose what we want. This is where you gotta really know what you trade and when you trade it, because this is important. Am I trading Euro USD? No. So why do I need news for it? Well, you might want to know about it. Is that going to impact your market? That's a question you got to ask. Is DXY going to impact your market? Maybe. Is the US dollar going to impact your market when a CPI comes out? Maybe. Do your research, you know? So for me, currently, we're just going to go off USD because that's what I'm trading. But let's say there was some big news and I knew about something in China, I would click, you know, whatever comes in China. Expected impact. This is huge. You can have all of them turned on. The only thing I like to know is that you can change this anytime. So what we're going to do right now is, let's say I got on Sunday or on Monday, and tomorrow's a trading day. I would be, okay, let me look at any high impact. Is there any high impact right now? That's all I want to know. And event types, you do all of them. You want all of them. Apply. So now, what does it tell you? It tells you that for a whole week, from Tuesday to Friday, there's high impact news. It tells you every day how many high impact news there are. And it tells you what time. And it tells you what it is. And the cool thing is, if you click this folder, for example, I have no clue what Empire State Manufacturing Index. You click this folder, it tells you everything in the past that happened. You can see the you know, history repeats itself, if you will. You can see where they got it from, so the source, and you can go check that out yourself. So you can have, you know, the primary source, if you will, which is pretty neat. You can have the latest release. So on the website, you can have what they're actually coming up with. You can see this. That's pretty good. You have measures. You have usual effects. So actual greater than forecast is good for currency. And so this is important. Actual greater than forecast is good for currency. So as you can see here, there's the actual and then the forecast. And so it's saying if the actual price that's coming out at 8:30 on Tuesday, if it's greater than the forecast, so if it's like, I would say -3 because it's bigger. If it's -3, it's good for currency. What does that mean? What's the currency? Well, the currency right now is USD. What's the currency for SPX? It'd be DXY. Whoops. So if it's good for DXY, it's bad for SPX. Make sense? When is it released? And then why traders care. This is pretty big. It's leading indicator of economic health, business, blah, blah, blah. And you can read them. So how I base my trades. Now, I've noticed a little pattern. You notice that it's coming out at 8:30. Usually when it's like this, where it's one high impact news and it's, you know, 8:30, it's like an hour before market open. That usually means that I could trade that day. Now, if it's CPI that comes out at 8:30, I'm not trading because I know the only, okay, I'll mark him right now on the screen so you know. The news events I will not trade is CPI, NFP, Powell speaking. What else? The other one, PPI, you know, PPI. What's the other one? Those, listen, those are like, those are like the main ones. You feel me? Like, and like once you start trading, you'll know when these happens. But you want to look at your news. You want to look. Empire State Manufacturing Index, listen. You can go back. Like what I do is like, oh, it happened on December 15th at 8:30 all the time. Let me go back to December 15th and look at the price action. Was it fucking shit? Was it hard to trade? Was my strategy involved? Can I trade? Like, just backtest that day or those days. And if you feel like you're comfortable trading that high impact news because it's only one, hey, go for it. If you don't like it, don't do it. But for example, for 8:30 on Wednesday, it's core retail sales. 8:30, it's a little more impact news, but we can see what happens. So I base my trades off a lot of news events, right? As you guys heard, if I'm not trading CPI, I'm going to call out to Discord, hey guys, for this week, I'm trading from Monday to Wednesday, but not Thursday and Friday because of this and that. And here's the confluence. And you can see if you've joined other people's Discord, other like traders Discord, they'll tell you the exact same thing. They're not trading CPI, or maybe they are, but they're trading like the last 2 hours of CPI because that's when price kind of calms down, right? You're not trading the moment CPI comes out. That is pure gambling. And I don't care if you've been in the market for more than 40 fucking years, dude. I could be in the market for 5 minutes and we could be both gambling at the same time by trading CPI. That's how it works. Experience will not beat CPI. I'm sorry. You're not going to beat CPI. Let's delete this. So yeah, I use 4x, and then so this is like the weekly outlook for the high time frame, and then I just click all so I can see really what happens on those days. And you can see Monday, what do we have? Bank holiday, right? If you didn't know, you know now. And then you can see day 2, we have WEF annual meetings. This is the entire day that happens, or all the my bad. This is all the currencies. What is it? I don't even know what it is. Annual meeting are held in Davos and attended in central bankers, prime ministers, finance ministers, trade ministers, Most meetings are open to press conferences. Okay, so yeah, can create significant market volatility. So this is nice. So it's a bank holiday, but we have this meeting. Can we see, is it live? Okay, so it's not even, watch live section here. Is this live?
So hello, I'm Berg Dushek. I'm
a lot of Russian propaganda, and I absolutely.
This is for, okay, no. I've never seen this. So I've never seen this, but pretty interesting. And you can see, for example, Tuesday, just tomorrow, it's a live trading day. It's going to be price action is going to be real unless there's fucking choppiness. And you can see this yellow folder. You might say FOMC. Everyone freaks out when they see FOMC. Everyone freaks out. Everyone that I know freaks out when I say FOMC or they see FOMC. You got to remember, this is not Mr. Powell speaking. When Mr. Powell says, good morning, that's when the candles start fucking up, you know? Other than that, you don't really need to worry about, especially when it tells you it's a yellow, so it's low impact. High impact, medium impact, barely non-economic. That's just what it means. And then yeah, to answer your question, I just base my trades off the days I want to trade and not trading, and I look at the time, and then I just look at the price action. So listen, every week is going to be different for everyone. That's how I base my trades. That's how I base my week. And I'll tell you right now, if you're not looking at news like I'm doing or anyone else, you're going to get fucked. And it has happened to me because I was in a trade once and all of a sudden freaking, I don't know who, Mr. Powell starts speaking, and you can see, I'm like, why is it chopping? You know, like, why is price, like, well, I'm in a trade, I'm bullish. All of a sudden, like, price stops to trade all of a sudden. They become like weird ass candles, like small, like no trades. I'm like, what is going on? And it's like a tsunami, you know, it's like before tsunami, the water kind of like floods away. That's exactly what it is. It's like the candles are like waiting for something big. And then Powell speaks, and then I get fucked. And I was like, oh shit. I look at the calendar, and there it is. Mr. Powell, 2 p.m. High impact. There it is. NFP full margin, best buys. Yeah. So that's just how it works. All right. It's looking good, but I don't like it. So this was expected and not expected at the same time. Look at DXY real quick. Is it the 5 minute? Oh yeah, it is. Let's see if these line up. Boom. What's the narrative? The trade DXY looking bad at the moment, ranging. The narrative is I just want to trade. Now the narrative is I went over it. It was like Asian lows got swept. Basically almost touched low dead, which was not really a big confluence, but it created the market structure shift that I saw. The range entered on the OT. I saw the I'll talk about this in a video on the demo, but the price action of these candles closing above not only the consequent encroachment, but that fair value gap showed bullish price action. And then we had a very nice standard deviation leading up to this 1 hour order block. So that was my narrative. It's very basic, but that's what I was going for. Yeah, DXY. Well, DXY is the opposite of SPX. So, well, not 100%, but like you notice that this is down and this is up. You may be like, what the fuck? Why is the economy going down and why is the stock going up? They're just opposites. And it's good for narrative too. Like if you look at DXY and there's liquidity down here, for example, like just right here on the 5 minute, DXY is going to want to target that, right? It's going to want to target that liquidity. So for me on SPX, it's probably going to want to target in the middle of this liquidity or even this liquidity right here. So it's good to look at both. And then if you really want to be extra, which it's fine if you are, you can look at NQ, because NQ can also tell you a lot of stuff about the, oh no, it's delayed. Fuck. Wait, I thought I had a free trial for this shit. Oh my fucking god, dude. Alright, what about QQQ? Okay, QQQ is not, okay, cool. But it's closed. Motherfucker, dude. Oh my fucking god, dude. What isn't fucking closed, bro? Jesus. Okay, so you can see on SPX here we're pretty bullish. I'm just gonna put this out in the Discord real quick of my TP. TP1 TP1 is this stop loss. Where's my stop? Right here. And entry was consequent encroachment. Okay. You used to trade smart money concepts before too. Yeah, can I be completely honest with you? Like, I'm gonna be like straight up. I don't even know what smart money concepts are, bro. Like, I feel like everyone changes the words and meanings of it. Like, to me, smart money concepts are like I can't describe them. Like, I feel like everything's ICT. You know what I mean? Like liquidity, fair value gaps, order blocks, and I'm like, what do you mean? Like, what is smart money? Like, the only thing I might know is like SMT, but that's also ICT. Like, I feel like ICT came up with everything. I'm sorry. Like, what the fuck is smart money concept? It just sounds like the Walmart version of like, oh yeah, I'm a trader. I trade smart money concepts. I make a lot of money. Dude, what is I? Yeah, but in cheaper. Yeah, exactly. Exactly. Yeah. I mean, let's look it up. Let's see what Google say. Smart money concepts. Let's see what it says. Trading. Oh yeah. Full guide. Yeah. Yeah. Let's look at this. Theoretical okay. Forex. Oh god. Do I gotta buy a course for this? Yeah, and trading. Oh, Forex trading involved. Okay, so it's fucking trading. It's Forex. Yeah, but what is it? Oh my god. It's all about supply and demand. Oh my Jesus. It's supply and demand. It's supply and demand. I need to click off. Supply and demand. Fuck my ass, dude. Retail traders tend to believe the market is a fair for them to make the money, but S&M might prove otherwise. What is it, bro? It's not telling me what it is. Oh, complete. Okay, so yeah. So look at this. Please, please. Order blocks is part of a smart money concept. Who came up with order blocks? I'm pretty sure that was ICT or the guy before him. Let me see. Breaker blocks. Yeah, that's ICT. Fair value gaps. Oh, yeah. So I'm trading ICT, but you're saying I'm trading smart money concept. What the fuck are you talking about? Breaker structure, change of character. Okay, change of character. I'll give it to that. I don't think ICT teaches this. Liquidity. All right, yeah, that's bullshit. No way they came up with that. Yeah, that's bullshit. I refuse to believe that. Yeah, so no, I don't trade smart money concepts. Do I use like, well, you can call it Twitter, bro. No. Well, I used to, but I don't see a purpose because I'm not famous. I don't need to give like live call outs on Twitter, you know? I don't need to be like ICT where he fucking tweets 10 times a day. So, not, I don't necessarily use it, but I'll use it for like if I get really big, I'll use it. Yeah, I know, but it's just like, isn't it really hard to get followed on Twitter? Like, it's just like, it's even worse than YouTube. Like, your tweets are just forgotten about. Unless, like, you guys fucking follow me and retweet everything. That'd be dope. Just fucking army of retweets. Will be all over the fucking trending. I'm not gonna lie, I'm surprised how fast we grew, bro. I've been posting TikToks like almost every day. Dude, when I started this server, I started like maybe like a few weeks ago. We're already at like 60 plus members. Dude, this is fucking crazy, bro. And you guys are invested too. Like, I like this, bro. Got a strong community here. But you know what, bro? I want to become like, fuck. You guys know any other like traders servers or trader servers? Like, you know anyone else that is on TikTok that has like a server that you guys might know? Oh, fuck. I know a few. I think that's how I grew so much. My TikTok has grown a lot. And it's mostly just posting like trading videos. It's not even like trading recaps, or it's that and YouTube. YouTube, wow. YouTube has been quite a big, actually, let's look at it right now. YouTube has basically 300, bro, this is crazy. 300 subs. Some videos are like popping off. Like this one has 61 views. This one 100 views, 100 views, 60 views, 35 views, 300 views. Pretty sure this one's botted, bro. I don't know who did this. I have ads on my channel? Wait, did I just see an ad? Yeah, there's one comment, 4 likes, but 300 views, bro. That does not make sense. Yeah, but look how consistent I was, bro. Like almost every day. video on your video on video. And like, even if I like, look, I posted 14 views and I kept posting. Like, anyone that posts on YouTube would be like, damn, I got 100 views, now I got 14 views, and now I got 23 views. I'm quitting. Bro, I kept going, bro. And if you were like really come back into this, like, you'll see how I used to trade, bro. It was bad. Or maybe not this, but like, actually, it wasn't too bad. I just didn't have a solid strategy. Another thing I want you guys to know, if you have this in your notes right now, or just mentally know it, you need to understand what you're doing. And I'm being like dead ass. Like, when you go into the market, I'm not going to say it's like a fucking warfare and it's a battlefield and everyone's going to have fucking tanks. When you go into the market, okay, first of all, you're trading against like 90% is AI. Okay, the orders are getting filled instantly. And the other fucking 30%, or I guess 10%, is filled with retail traders that are doing smart money concepts and fucking ICT, which yes, I'm a part of it because I'm trading ICT. And only a tiny amount of people trade like, or tiny amount, I don't even know how many, but trade like, you know, trend lines, VWAP, EMA, stuff like that. And if it works out for them, it works out for them. But you need to understand that the strategy that you're choosing to trade, you need to understand it. So yes, maybe you're watching me, watching this strategy work. But guess what? It's because I understand it. I understand why it does this and why, for example, that candle closes earlier than that one, because I understand how the strategy works. I understand because I've watched it work over and over and over. I understand the strategy. But if you come out here and you're like, I want a new strategy every 2 weeks, I'm going to make so much money, dude, that is not going to work. You need to understand your strategy. And you don't have to make a strategy. Like, you don't have to come up from scratch and be like, oh, this fair value gap here and this order block. No. You can simply grab someone's idea, for example, ICT, Adonomics, whatever kind of YouTuber you want, and you can base it off them. And you can tweak that one. You can tweak that strategy into what you like and maybe what you understand. For example, I'll show you what I first came up, and I didn't even know this was ICTs. I'll give you a real story right now. I did not know that my strategy I'm trading right now was ICTs, until someone told me. You know how I figured out? I saw a pattern. What I saw was this, and I'll draw it over here so it's more this. Let's say there's big displacement. You have displacement. Let's make it green so it looks buyers. You have buyers. You have displacement up. What happens? What almost happens every fucking time there's displacement? On a bigger time frame, lower time frame, what happens every time there's displacement? There is always some kind of retracement. Always. Always, always, always. But you'll notice this retracement isn't to take out the whole range. It's to only come back almost halfway and to break out, to go even higher. So that's something I understood. That's something I saw in the market after trading for fucking 2 years. You can watch every fucking candle of your life and you will notice a pattern. And you can use, listen, if your pattern is breakout strategies, if your pattern that you're noticing is the New York Open opens higher and it trades lower, blah, 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 930, this and that, macros, maybe, if an inversion fair value gaps gets failed and then there's a breaker structure, then you enter all of this. If that's what you understand, then please do me a favor, trade that. Because if that's what you understand, then you can refine it to your understanding even more and maybe create a new strategy or learn from others and include what you know to make your own or to really refine what you might have learned. So displacement, what did I notice? Always creates retracement. And then I learned that ICT has this thing called a range tool, or, you know, everyone has a range tool, but there's this thing called discount and premium. Now you can switch them up, but basically anything above you buy, anything above or under you sell, whatever, this and that. It's vice versa. So when we draw this tool, right, we go from the swing low to the swing high, or in this case, it'd be a swing low, swing high. But if it's reversed, swing low or swing high, swing low. In this displacement, you have two ranges, the premium and the discount. What does that mean? That means that anything under the premium, buyers will start buying. Anything above, sellers will start selling. So we're over here and we create that swing high. We can start selling now, but we're not gonna sell under here. We're not gonna keep selling under this. What are we gonna do? Start buying. And what did I notice? In this range, in this premium range right here, there is always PD array. I was going to say fair value gap, but there's not always a fair value gap. There is always a fair value gap order block, internal liquidity, something for price to bounce back on. Now, take a look at this picture and take a look at my entry. You notice anything? It's the exact same. The exact same. Now, yeah, price action is a little choppy now, but you can see it's heading my direction. Is it going to reverse on me? Probably. Look at this fucking price action. It doesn't want to break out, but I understand this. Hence why I can explain it to you right now so clearly. Because I've researched this in the labs and I've spent 4 years researching this right now. It's because my brain understands the market and how it moves in that way. If your brain understands it a different way, then guess what? That is perfectly fine. That is perfectly fine. There is not one strategy that everyone needs to learn to become profitable. There's not one thing that everyone needs to learn to become profitable. That's why, and I recommend you, if you're only in my server, go join somebody else's server to see what they teach or what they promote. Maybe not promote, maybe what they trade and how they trade. Okay? Because that will help you understand not only my side of how I think, but maybe other people, maybe they trade Forex and it's a whole different way because Forex might not have the same price action as USD currencies. You know what I mean? So things can be different. Your strategy can change. I can tell you right now, for the past, when I first started trading to maybe 2 months ago, maybe a month ago or two, I had no clue what I was doing. What I mean by that is I knew fair value gaps, I knew order blocks, but the trades were random. They were just, oh, here's a fair value gap. It might be bullish. Let me enter. Oh yeah, I got lucky. Let's go. I'm posting on TikTok. I'll be honest, that's exactly what happened. And I'll also be honest, I lost a lot of money because I didn't know what I was doing. I didn't understand why I was buying. I didn't understand why I was selling. I didn't understand why everything was like that. So another good tip is to ask questions. I love asking questions, and not to me. Don't ask questions to me. Ask questions to yourself. Why am I taking this trade? Why am I in the market right now? And why am I looking to buy or sell? Why? And the biggest thing is if you can answer those questions and understand your reasoning for them, then you figured it out. You're going to become a billionaire. No, I'm joking. You figured it out. If you can, that's how you improve. By asking yourself questions, by knowing how to answer them, and by understanding your explanations, and by taking notes on every single question you have, that is exactly how you grow in any kind of aspect in life. Okay? This is not just for trading. Like, I'm going to be completely harsh here, but like, why am I fat? Oh, I eat too much fast food. What should I do? Cut down on fast food. Exercise more. Just that's like, I'm not saying you guys are fat. I'm just saying that's a life example. So in trading, it's the same. Why did I buy this company? Why did I buy so much? Why did I risk so much? Why did I know it was going to go up? Why did I not know it was going to hit my stop loss? Why should I put my stop loss here? Why should I take profit here? Why? Ask yourself questions, please. It'll help you in the long run. Let me take a picture of this just so you have it for notes. Okay. Does that make sense if you guys are still here listening? All right. So, all right. You can see here now we've created another range. This might be a little risky, but you can see the swing low here and then the swing high that got created. And then maybe, oh wait, I have 30 seconds. We can see the 5-second chart. Holy fuck. Let's see price action here. Is there a 5-second fair value gap? Let's see. Dude, what the hell is this? What are these candles? What the fuck is this? Yeah, look at this, bro. There's no wicks on the 1 minute, bro. This is crazy, bro. That is wild. Yeah, I was expecting this. Holy crap, bro. No wicks. So this range is a little small for me to, I don't like this range because I don't think price is going to respect it very much, as you can see from this candle. Now, this is where people would start freaking out. They'd be like, oh my God, bro, there's so much selling pressure. It's horrible. And to be honest, I'm freaking out because my entry is here, by the way. Like this is my entry. Break even is literally right here. It could very easily come back down and take me out. Should have probably had my take profit here, to be honest. That was probably my fault. Should probably move it now down to here and then take profit there. So if it comes back up, we'll be risk free. But that's a little oopsie. Let's look at let's do 15-minute. Let's see, what's this low? This low is 47. The same low. Uh-oh. This is not good. I'm not seeing any fair value gaps here it could bounce off of. We could get fucked. We could most definitely get fucked. But there's another lesson here for the liquidity. What did it hit? Yes, it hit this liquidity here. But what was the major one that I talked about? Relative highs. That's also liquidity. Relative highs is very strong because that's multiple orders being filled right now. Multiple orders. Billions of orders being filled right now at this level. So when it hits again, you can see relative highs. If we break out of these highs, then I'm stepping off because I know it's going to keep going higher. This is like the only, I should have taken profit here, bro. Fuck. This is when it, this is when you watch the move. Like, this is important to be on the charts, because this is when it could take you out. And to be honest, if it takes me out right now, I'm not mad because first of all, this is demo, and second of all, it's a bank holiday, so the price is just fucking horrible. So I'm not expecting right now I would be expecting like a macro saying like expansion. I don't know where. I got that off. I don't know why it's not showing up. Showed up for that. Oh yeah, it needs a way bigger move, bro. We haven't done shit. Right now, what's scary though is how fast it sold off. That to me is very, very scary of how fast it sold off. Let's just see if it's still recording. Yeah, it is. It's gonna be one long ass video. Like almost like a 2-hour video. It's gonna take like 4 days to upload. Who's gonna watch it all the way either way? It's gonna be fucking crazy. Oh, is it snowing for you guys? Where you guys live? Is it snowing? Yeah, it is. No. We have like a fucking blizzard over here. Hey, if we get school off tomorrow, I'm doing live trading. It'd probably be the only free live trading I do. And then you gotta buy the premium. I'm 17. Yeah. Why do I sound younger? I found really? I sound old. That's kind of harsh. I sound old. How old do I sound like? I've heard like 18, but I wouldn't go anywhere higher than 18. It's also because I'm sick. Like my nose is like stuffed. And it's in the morning, so I'm tired. Damn, really? That's funny. I think it's a combination of both. Me being sick in the morning, like everyone has the morning voice, you know, like oh, grumpy, like you know, like you haven't cleared your throat type of shit. That's exactly what's happening here. Exactly what's happening. All right, so on the 5-minute, this is the only price action I'll be looking forward to is, I guess, this range that we had previously. Looking for, wait, there is this order block. Just don't know if this will hold up. If this doesn't hold up, then this might be fucked. We might be fucked. Right now, price is looking pretty good. We got a minute left on this candle. I'm going to go to the bathroom real quick. I'll be right back. That's exactly what you want to see right there. Very nice strong move off that order block. I'm just gonna mark anything that's could be, you know, if it does. Oh wow. Look at that price action on the 3-minute, bro. That doji closing on the order block. What's up, Joey? And then a fucking wow. That's strong. See, now I think the theory would be to if we break this order block, if we trade lower, mentally I'm looking to sell now, because that would be big indication that we don't want to buy anymore. So far so good. We have 50 seconds left on that candle. I think the most important part is probably the second candle that comes after, because that's the expansion out of. But yeah, see, now it's starting to sell off. So yeah, exactly. What the this is crazy. Crazy. It's so close to selling off, bro. I feel like we could just just fucking we could just sell off right now. Oh, 3 seconds. Oh, I don't know why I'm getting emotional, bro. This is bad. Fuck. Shouldn't get emotional. This is where it's important, because we will see. Oh, we're only 3 minutes. Let's go on the 5 minute. Okay. This is what we like to see. If this 5 minute gets bought back up a little bit, I think that could be perfect. Or if this price gets bought. Yep, that's good. That's perfect. Yep. I'm looking for any inversion, fair value gaps, anything like that. Possibly could come into confluence here. This fair value gap held up. It's just these fucking wicks, bro. Just look at, there's absolutely no wicks. This looks like pre-market price action, bro. This is like fucking. Like, you go from pre-market action to like volatile shit, bro. It's crazy. Very crazy. But okay, so here's the plan. Basically, this would be the move right now to break out of this high, because what happened, right? And I was just talking about this. We had the expansion move, and it creates that swing high because of what? Because of a high time frame, or simply just a simply because of buy side, or liquidity, internal, external liquidity. So it creates that swing high, and then guess what? Because of that expansion move, we create a premium and discount range of that range. We mark that range. Then we target anything. If we want to start buying again, we target anything in the premium. You can see in the premium, we had this order block here that was left. And as you can see, the price action from here, you can see that it closed above the order block. This candle closed right here. It stopped trading at the order block, and then we created the new candle. Trades a little lower to go more into premium, so people can start buying, get faked out, or start selling and start. Okay, so they start selling now, and they get faked out. and we start buying up again, and it'd be like, fuck, I gotta sell. So they sell the position, so it keeps buying. And so now this would be the move where it's like, okay, now we gotta use the momentum we have off this order block to break these highs and to go higher. See, if we don't see that right now, or not right now, but if we don't see that in the next 30 minutes, could possibly be looking to get out, because that's like the last resort type of shit. We're already so, like, the trade's so small that we're already so close to the break even. Like, it's not even funny. Like, if I had an option contract right now, I'd be fucked, because the delta would be fucked right now. Dude, I expected more people. I feel like some people didn't even show up. Dude, there was 7 people interested. I didn't see meow. Maybe I did. Maybe they joined and just left right away. I don't know. Let's see what this candle does. I was gonna do back testing today, but you know, I thought bank holiday meant the I thought bank holiday meant that the market was closed. But I guess it opened, but the price action is just very, very small, very not volatile. So I guess instead of back testing, we'll do this live trade. But I guess you guys get to see my fucking analysis and live trading skills and my strategy. Just for reference, by the way, the range here that was created off in the OT, you can notice that the OT lines up with that fair value gap consequent encroachment, so that's why I didn't have the OT, but you can see I entered off the OT, and the trade currently is this, right? So you get on the consequent encroachment. The trade here, I did have it like right here, the stop loss, and you notice how close that got. So mentally I'd be out of this trade, but what does the strategy teach? It says that, well, in my terms, you're not getting out unless this candle closes down here. Where did it close? Way above this fair value gap. Second candle, where does it close? Way above this fair value gap. Yes, it trades down here, but does it close down there? Nope. Nope. No reason to get out. And then I just moved my stop down here because that was probably a safer option. But if it even broke and like closed under here, I would have been like my mental stop was here, you know, if it closed. And then the profit target, knowing that this is a fairly small trade and very, because of the risk to reward, I know this looks shit, and it probably is. Yeah, 2.4. I want to target something that's easy to target, because you can see this liquidity up here. I don't want to target like anything above this, because not only are we hitting a 1 hour order block, but the last thing I want to hit is this 5-minute order block, like right here, basically, or this whole order block here, which is right here at that negative 2.5. That's the last thing I want to hit, because that looks very strong to me, because we don't have a lot of buying pressure. So once we get that buying pressure and we go up, I can easily see this start to sell off right again. So I want to get in and get out as quick as possible, even if the risk reward, you know, right now it's not too bad. I do want to really see this break these highs. Once we break these highs, it takes my first break even trade, and we'll be in profit from there, and then the rest will be history. You know, but this is where you want to see the, let's look at DXY real quick. Dude, I'm so hungry, bro. I'm starving. I need Chipotle. Wait, Louis, is that how you spell, is that how you say your name, like Louis or Louis? Louis? Joey or Louis, do you guys eat like Chipotle? Fucking love it, dude. Yeah. I had I ordered Chipotle one day, like online. I didn't go to the restaurant, and you know how they underserve you like fucking shit, even if you go to the restaurant, like you ask for double chicken and they charge you for double chicken, but you only get like half the fucking chicken. Not spelled like that. Well, how do you say it? Like, am I saying it right? Like it's Lue, like what Lue or what? Like, am I saying it right? Lu a what? Oh, whoa. Lu a y L. Yeah, I'll just go. Oh, that's oh, okay. All right, I'll just do that. Anyways, yeah, I was at Chipotle, and when you go to Chipotle, you know how they underserve you. If you've ever had Chipotle, they never serve you the right amount. They charge you extra. Anyways, I ordered online, and it's the worst way to do it because you're not there to check how much they put in. So you're just praying that they put a lot, and unfortunately, they didn't. So I ordered like a bowl. I had like basically everything on the menu. It cost me a little bit of money, and we get there. I ordered for my sister too. And dude, the bowl was basically half empty, bro. I was fed up. I paid like at least like $40 for it. Half empty, barely any meat, barely any rice. I was starving. I needed Chipotle like that. I was drooling for Chipotle, you know what I mean? Fucking, bro, if I ever get rich, I'm making a restaurant where every time you order and you come to the restaurant, you're getting 100% and 110% of what you asked for. You ask for double chicken, you're getting 110 double chicken. Like, you're getting the whole proportion. If I gotta spend my own pocket money to buy their freaking food, I'll do it, bro. Bro, I hate restaurants that underfill you like that. Oh, we're about to. Oh, this is good. We're about to break out. We are about to break out. Although I don't like what DXY is doing. I need DXY to sell off now. Like, hard sell off. You know what's crazy? Can I show you something? So we posted as you guys know, we have our premium I wouldn't call it a course. Joey, like you're in there. It's not really a course, is it? Like it's just like it's advice and like call outs, right? So it's basically we released it yesterday. And the website, you can see how many views people have like clicked the link and viewed it. Almost 30 people have viewed it in the past 24 hours. And it resets every time at like 4 p.m. So it's going to reset like today. 30 people. Now, that might not seem like a lot, but if you do the math, that's a lot. Like, to me, I was expecting like 4 people to maybe check it out and be interested. But 30 people, bro, they say it's a 500% increase from what we've seen in the past. Obviously, like, we had 0. But that is fucking crazy. I'm so like genuinely happy that it worked out so well. And I asked around like I didn't want to make it too like me and Keegan didn't want to make it too expensive, but we didn't want to make it too cheap either because it is a lot of stuff that we're offering, and we are high school students. Like, you gotta understand, like we're students, bro. We don't have all the time in the world. We're both still learning how to trade like fully, and this is not our day job. So obviously we don't have all the time in the world. We have other things to do, and one of the things I was skeptical about was the call outs. I know that it sounds like I don't know if you've heard the term like guru. It sounds like I'm a fucking guru. Or yeah, I give like call outs for free. I fucking make money. I give call outs on as S&P 500 and NQ and shit. So that's what I didn't want to do, but I realized, hey, if I'm good at trading, I can probably just say, hey, I'm buying here. You don't have to take this, but this is what I'm doing if you want to copy me, for example. The only thing I'm realizing now is people are going to copy what I trade. not learn their own strategy. And that's not what I want. I want you to find your own strategy and refine it, and I can help you with that. But I don't want you to base it off me and, get my call outs. Yes, make some money, but what if I just die one day? Then you're like, what the fuck? I don't have no more call outs. I don't know how to trade. All right, I don't like what's going on DXY right now. It's looking extremely bullish, so that means that SPX will be extremely bearish. Really don't know why it's buying up. Really want to see this candle start to sell off. I think that would be ideal. I'm not really sure why it's doing that. Because I don't like this doji here that it created right here. I mean, this is like a 1 minute range right here. It's a range in itself. Like, let's draw this, for example, swing low, dot swing high. There's no order blocks, but there's fair value gap that gets traded through here. There's a 3 minute fair value gap right at the OT, or right at the order block. What am I saying? I think the deal is we've been live for almost 2 hours now, so, or an hour and like 40 minutes. We're gonna keep watching this. Once it hits my first TP, I'm gonna take a break, because once it hits my first TP, I'm basically in profit. And then we'll move break even a bit higher, and then we'll wait for the end of the day, and I'll update you guys on the on what happened with the trade. I'll do maybe a video on it. Actually, I probably will do a video on it. I'll let you guys know how it goes. This sells off, bro. DXY, dude, I fucking hate looking at DXY. DXY is just fucking ripping through the walls, bro. What the fuck is DXY doing? I'm just waiting until this fucking candle just goes right through there. Like, this is really not holding up whatsoever. The fact that he has to touch this imbalance twice is a little scary for me, but I like that tap in minute, not trading. It's starting to sell off. Hopefully, okay, DXY just has to fucking trade higher. Okay, perfect. What else do we have? Oh, I guess we could, what do we have the time? I'm really watching this, bro. Dude, if this closes under our fucking order block, bro, I'm gonna be pissed. God, I do not like that move. So it went from bullish to bearish, like in a half, like, look. Bot sold. Yeah, this looks like it just sold and then straight, I've seen this before, that straight through the order block. Yeah, no, this price action is fucking stupid right now. Yep. What the fuck is DXY doing, bro? The 15-minute is... Okay, gotcha. 15-minute is not looking too good either. You can see this wick on the 15-minute, like it got bought all the way back up, and you'd expect some kind of doji or move up, but the close under this 15-minute is going to be crucial because I think this is where we can. This is where we can see Faye right here. Yeah. I think the only thing I don't like about this is how small of a range it created. The expansion out of this range right here was so small that like 50%, like we're already half. Like if it closes under this, like I'm basically like we're basically in drawdown already. Like I wish that the expansion move here that we got in was like a way higher, so that this little move retracement whatever was only like this, for example, and that's not scary. What is though is when the move itself is so small that all it takes is one big fucking candle to just take it all out. That's what's basically happening here. Because the displacement is so small, the retracement sometimes, I guess it's not even retracement, the retracement, the retracement, the reaccumulation sometimes is so strong and breaks through these levels that it's going to completely wipe us out here. And which, if it happens, it happens. I'm not mad, but it's kind of unfortunate that it didn't create a big range, because just look at these price action and that candle. Like I've seen this before when it creates a doji and it has that kind of candle like that. We'll see how this fair value gap holds up, but to be honest, it's not looking good, unless the only thing that could happen is if this candle is a doji and that candle just buys all the way up, that would be like fucking wild. But that's the last thing I'd expect right now, to be honest. Guess we wait. Gotta wait. I'm gonna end the recording now, just so I can start uploading on YouTube. So if you guys are watching, this would be the end of the recording. Like I said previously, if you guys want to, I'll post a video on this trade anyways, so no worries on that. Obviously you watch it live. I'm not expecting you guys to watch the entire fucking video, but it's there if you need it. I'll probably make like a playlist. It wouldn't be like in my main videos, it'd be in my playlist. But yeah, let me go ahead and end it now, and I'll